Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like you see here with our 21 SPY and ES mean reversion systems, and of course our latest KISS trend systems, which I'm releasing a big update. There's nothing else like it. I'll be doing a video on that shortly. Anyway, guys, hope everyone had a nice Thanksgiving and a nice weekend. Let's go and get back to this video. It's Monday, November 27th, 2023. This is our backing recorder for our website, which I'm going to get started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, November 27th newsletter. Again, Steve did the weekend newsletter, so I hope everyone had a really nice weekend. I hope you had a great Thanksgiving. Anyway, tonight's newsletter, as you can see, divided into 6 major setups. As far as the market, again, not a lot happened today, guys. Just a lot of chop. The major indexes pulled back a little bit. We've had a heck of a rally in November, as you know, per seasonality. And quite honestly, if seasonality is going to kick back in again, usually there's weakness the first 1 to 2 weeks of December. So that's kind of what I'm favoring, maybe a slight pullback in the market. In fact, it's better for the bulls if you get a slight pullback, like a 3 or 4% pullback. I mean, that would help give energy to the market, work off some of those overbought conditions, and set up for a nice Santa Claus rally. So again, even if you're a bull, you should also want to see some sort of pullback. Again, KISS systems have knocked it out of the park. They all went, especially for the indexes, many of those went long back in October, just a couple days off the lows, doing very well. And I'm going to discuss these KISS systems quickly because a lot of you, or quite a few of you, still have not set up your favorites and are not using them. So let's go ahead and get started with those. So the first image below, item number 2, this is directly from the website. Again, if you're a subscriber, go to Systems, go to KISS STS tables, and when you do that, there will be various tabs. But anyway, this is from the favorite. There's a tab called Favorites that's on the upper left. It's not showing up here on this static image. But anyway, at the top, you have to click this checkbox that says Receive Alerts for your favorite instruments. Thought about making that by default. It's just on for everybody. But I think spam laws, you should probably click it yourself. And remember, to set favorites, simply click the star next to any of these stocks or ETFs you want. And every day or whenever there's a new change, such as one of your favorites takes a new long, or there's a new smart trailing stop generated, or there's or the position exits, you'll get an email notification automatically from the website. So here's my favorites, for example, and you can see a lot of these are up very nicely. Obviously, a couple of these leveraged ETFs are knocking it out of the park. BULZ up 40, almost 48%. SOXL up 36%. Amazon, you could see, had a new smart trailing stop generated today. That's the 6th one since it went long on October 30th, and the trade is up 11.3%. But you can see these trades on my favorites are all up very nicely, except for URA, which is only slightly down. Again, if you haven't set it up, you're missing a valuable resource. And remember, I'm going to be adding a new section to this, a premium section with even higher performance KISS systems. But even the standard default ones are very good, and you should be using them. Next, here's an example, just some of the emails that went out. These are actually individual users, but you can see this user 5059. I mean, that was his favorites, and that was what this website emailed them today. New smart trailing stops on Amazon, CRM, NWS, PANW, etc. And you can see his favorites are up nicely. The ones that generated new STS stops today. And this guy only had Amazon that gave a new stop today, and this guy. But again, This occurs automatic, guys. You'll get an email. And also for the high performance KISS systems, I'm going to include SMS text messaging. So you'll get alerted that way as well instead of just email, which sometimes emails are not the best. They can go into spam, etc. Next, here's a couple examples of some of these high performance KISS systems, and some of the high performance ones that will be coming. They're not going to be daily charts. Some of them will be daily charts, but some will be intraday charts because we get bigger performance. So here's UPro, 78 minute. There's 5 78-minute bars in a day, for example. You can see it went long here on November 2nd. And look at all these smart trailing stops that have been generated since. Obviously, it's up very nicely. Current stop is 46.80. So if the market pulls back, 2, 3, 4% in December, it'll stop out, but it'll lock in a very nice gain. And here's QLD. That's the 2-time leveraged ETF for the Qs. Excellent entry down there. Look at all those smart trailing stops. Currently, 68 is the stop. Very nice trade. Image number 5. So here's a couple of the high performance systems, KISS systems that I generated on the weekend that I showed some folks on the website. AGQ is the 2-time leveraged silver ETF. This is a 130-minute chart. So there's 3 bars in a day. So here's some statistics. Here's the number of trades per year. Average 12 trades per year. It's still not that many, guys. Easy to hold a full-time job and still easily follow this. Here's buy and hold. Look at AGQ and buy and hold. I mean, this is not something you want to buy and hold. Okay, obviously 2010 I had a great year, but look at these other years. They're hit and miss. They're about 50% of them are up or down. And look at the drawdown. Average drawdown is 56.8%. That's the average. The max was 82%. Look at the KISS system. Only a 5.4% drawdown, average drawdown versus 56. So 1/10 of the drawdown. But also look at the average gains. Almost 55% average annual gains on the KISS system. Only 3% annual gains on the buy and hold. Quite a difference, isn't it? So this year it would be up almost 33%. Last year it made 65.6%, 11% the previous year, 117% in 2020. And again, just think about it, guys. Look at some of these numbers. 2013, buy and hold lost 64%, but the KISS system only lost about 5%. Here's UGL, that's the Ultra Gold ETF, high performance version. Again, take a look at this compared to buy and hold. It isn't even a comparison. Average drawdown only 4.3% versus 36% on buy and hold. 27.5% average annual gains versus only 8% for buy and hold. Again, just an example. Really excited about this stuff, and I hope you guys are too. I am going to charge a premium for these things, but again, you guys shouldn't care about that. I mean, if these perform anything like they show historically, again, I cannot guarantee that, obviously. But even if they only do half of this, they're still going to knock it out of the park, and you're going to be very happy. All right, guys, let's go and move back to the general market. Again, on the KISS systems, as far as when I'm going to be launching those, the new ones, hopefully my goal is before the end of the year. I can't give you a price yet. That's some of the common questions. And again, go to the KISS tables and set up your favorites if you haven't done so. Anyway, back to the newsletter here. Here's the index sector table, what transpired today. Again, minor pullback on the index today, mostly consolidation. We are very overbought. Usually the market has weakness after Thanksgiving or early December, so we'll see if we get that. It would be best for the market. Here's the 21 market sectors we follow. The majority were down, mostly small losses. Currencies, US dollar down 0.2%. Crypto down today nicely. Commodities mostly down. General DBC index down 0.67%. Crude oil down 0.9%. Natural gas down 1.8%. Agriculture, corn, wheat, all down. Now, precious metals were up. Gold up 0.7%, silver up 1.3%. GDX, the miners, up 1.6%. This area continues to look good. Steve talked about that on the weekend. We've had nice trade ideas there. I have high performance KISS systems for GDX as well, as you know. I have for GDX. I have for SILJ. That's the or the SLV. That's silver ETF. We have UGL. So we have plenty of high performance KISS systems for the precious metals. As far as bonds, the 10-year, 30-year pulled back nicely today. Next, item number 7 shows the economic news calendar. Being a, let's see, no, guess we don't. So usually the first week of the new month, you have jobs report on Friday. We don't have it this week though. It's next week. Anyway, lot of news here. So I'm not going to go through all these, but a lot of news on the docket this week, from housing to Fed Beige Book, GDP, PCE, initial jobless claims, PMI is a big one, ISM, a lot of news this week. All right, guys, let's go and jump to the index charts. So first chart below, item number 8 is a monthly chart of the 5 key major indexes with Bollinger Bands and some trend lines. Anyway, look at those solid up candles in November. Huge moves, up 6, 7, 8% on these indexes. Nice move and playing out for via seasonality. IWM, you could see, held this big support, rallying off of it over the last couple of years. Next, chart number 9, here's the same chart, but on a daily. Again, we've had a hell of a run over the last month. Since we were very oversold into late October, look at, below the lower Bollinger Bands, look at these moves up. Just crazy. Again, we're above the 9 EMA on all these. Again, it would be best if we get a consolidation here to, 3-4% pullback. That would help the markets regain some energy, work off some of that overbought, and then have be set up for more of an end of year rally. On the there's an open gap that could be a magnet, which I'll discuss below. Let's move on to our proxy, which is the S&P 500. Here's the daily S&P. Again, remember we talked about this 5-wave move down into late October. It was not a traditional 5 waves because you had an overlap, but more of a leading diagonal, and we've had a nice heck of a move up since. Okay, we did fill an open gap from early August, which was a magnet. We have a slight RSI divergence, but again, this would be a logical area to get a pullback. We'll see if we get it. Chart 11, here's the equal weighted S&P. Again, as you know, these indexes, with especially the ones with the weightings on the 7 to 10 big cap tech stocks, are skewed. So when you take the weightings out, you get the equal weighted. So this shows you, under the surface, the other stocks have been weaker. What the market hopes is they play some catch up. Anyway, this inverse head and shoulder pattern on the equal weighted I've been showing is obviously played out. It is in a supply zone here, so this is a resistance area logical to pull back from. Chart 12, here's the KISS system for the S&P daily. Again, as you know, it went long there in late October. Nice entry. You can see the current smart trailing stop, 43.68. So profits are protected nicely. Room is given. Chart 13, here's the 4 time frames we like to follow. Again, guys, we had that beautiful bottom in late October, super wide moving average ribbon, the Mark 9 support cycle. Everything was lined up, and we've had a hell of a move. Again, we have a couple A's up here to Mark 9. So, that's amateur buying, that's price moving up on lower volume. So again, would be nice to see some sort of consolidation here. The ATR on these smaller time frames is now support. Chart 14, here's the half-day chart, 195-minute. Again, we filled that open gap from early August. It was a magnet. MACD starting to cross down. Doesn't mean we can have another little pop. I would love to see a consolidation soon. You could see the moving average ribbons when they get wide. Those led to reversals, and it's getting wide to the upside now. Chart 15, here's the 60-minute chart, just showing you this tight channel. We haven't reached that yet. We do have some divergence up here on the RSI on the MACD. Again, a clean break of this. One target would be filling this open gap here. Chart 16, here's another 60-minute chart. Just shows you the same thing. Here it highlights all these open gaps. It shows you how strong this move has been. I mean, rarely do you see 6 open gaps in a month on the indexes. Just insane. But again, on a nice pullback, say into early December, fill in his first gap, maybe even get into this area, 4,400, 44,380 could be a magnet. For now, again, the Bulls still have the football. But again, even if you're bullish, guys, you should want a pullback in the market because it helps reset it. Think about it. It's like if you go sprint as fast as you can, you get out of breath, and it's the same with the market. It's had a hell of a run. It needs a little rest here. It's better for it to regain its energy. Chart 17, here's a 10-minute chart. I meant to adjust this, apologize, but you can see kind of a coil forming here, even if you adjust this trend line. Again, we'll see what happens tomorrow, and let's go to move on. Chart 18, here's the triple Qs, NASDAQ. Again, that's where the strength has been. Remember, there's 7 to 10 tech stocks that really dominate the market. And anyway, still holding its 9 EMA. That's your first support. Remember, this made a new all-time high. Chart 19, here's the weekly chart. Again, just showing you the weeklies into a supply zone. Doesn't mean it can't work higher into the supply zone. Heck of a rally from that ABC three-wave pullback from July into October. You can see the moving average ribbon had pinched perfectly. Everything lined up. Chart 20, here's the half-day chart. Shows you the same thing. You can see the open gap below that could be a magnet on a nice pullback here. Chart 21, here's the KISS system. Again, it went long in late October on here, just a couple days off the lows. Very nice entry, and you can see the current stop, 369.60. So profits are nicely protected, and there's still room given so that it's hopefully not stopped out of noise. You can see the previous one was a loser, which is fine. The previous one before that was a nice big winner. Image number 22, here's the 4 time frames. Again, really similar look to the S&P. You can see the daily here. Hell of a move. Things are stretched here a bit. ATR, we're above it on all these time frames. Now we do have a support cycle on the 78-minute here. So could we get yet one more pop? Again, it's possible. Bulls are in charge. The trend is up until it changes. Chart 23, IWM Russell 2000 was the weakest index this year, as you know, small caps, because it doesn't have those big cap tech stocks like Microsoft and Nvidia, etc. Anyway, nice rally off this big support area, this 160 area. Chart 24, here's the daily chart. Again, this inverse head and shoulders pattern has been playing out nicely. Right now, we're still above the 9 EMA here. 200-day moving average is just above. Chart 25, here's a 60-minute chart, still in this like coil type pattern. We'll see which way this breaks tomorrow. And that does it for the indexes, guys. All right, let's go and look at a couple indicators here. So chart 26, here's the VIX. As you know, the VIX is now all the way back to this long-term support. In fact, I should add a horizontal line here. Again, you can see the lower Bollinger Bands are buried. So the VIX, it's really going to be impossible for it to test its lower Bollinger Bands without some sort of bounce. I've been talking about that. Chart 27, here's the NYSI 9 EMA crossover system. Think about it like a mechanical system. Look at these nice trades, very nice entries, nice exits. They don't catch the exact tops or bottoms, but they catch, 70-80% of the moves. And this triggered, again, didn't catch the bottom, but nice move since. Chart 28, here's the BPSPX, another system. Again, guys, if you want to use any of these systems, you can just click View Live Chart from the newsletter, and you can pull it up anytime instead of just looking at these static images. That is a reason, if you're a YouTube subscriber, to subscribe to us so you can get links to these live chart URLs. You don't have to recreate them on your own. Here's another one. This is a nice little mechanical system as well, the 2 and 5 EMA crossover on the NASDAQ McClellan summation. Look at these nice buy and sell signals. Now, Chart 30, here's the McClellan S&P McClellan. There is some divergence here, as you can see. Nice divergence. Again, a lot of times divergence that shows up on this McClellan with respect to price, the S&P, you know, produces either a high or a low, and we do have a negative divergence here. So be aware of that. That would line up for a pullback, perhaps, in this early December, like we're saying. Chart 30, um, this one shows you the McClellan oscillator for the NASDAQ and the NYSE, so the NYMO and the NAMO. Again, you do have a little divergence here, like I said. Chart 32, here's the NASDAQ 52-week highs minus lows. And like I said, guys, and this chart really epitomizes it. NASDAQ's basically back to the highs, but the highs minus lows is still below zero. Again, that's because of the weighting, the 7 to 10 stocks that dominate. Okay. And you can see the new highs is lower than the last time. So you have a divergence here as well. You basically have a price back to the highs, but the new high is much lower than the highs in July. Oh, the other charts I meant to show you guys, and I did not. In I thought I included them here. Is the percentage of stocks above the 20-day moving average? Let me go ahead and just pull that up here. Steve included these on the weekend, but here's a great example. So here's the percentage of stocks in the S&P 500 that are above their 20-day moving average, and you can see up here over 90%. Now you don't have a divergence here like you did back in July, divergence with the percentage versus S&P, but it is very overbought here. So again, given that, this probably needs to work off. So back in October, this was oversold. Now it's way overbought. All right, moving on. Here's bonds, high yield, chart 33, high yield corporate bonds. Again, no changes here. This continues to rally. Remember, it broke through resistance a week ago, found support there. Chart 34, here's a 2-hour view. We do have 5 waves up, like I said. So eventually, once this tops out, I'm looking for at least an ABC pullback. Chart 35, here's the 10-year Treasury yield. Nice pullback today. Remember, it had a parabolic uptrend, which we pointed out with the RSI and MACD divergence, and that was unsustainable, and that has produced a nice pullback and thus a nice rally in the market. So that has played out. Here I added fibs from the October highs to the April lows. We're approaching the 38% fib. Beware of that. So this area in here could be an area of support and a bounce, and maybe that'll correspond with the market pulling back. Again, it's late November. So, it's possible that, the market still holds up here into November and for window dressing, and then we got our pullback in December. Chart 36, here's the TLT 20-year bonds, obviously move opposite of the 10-year. You can see the exact opposite inverse of the parabolic move, a downtrend instead of an uptrend, and a nice move up. Chart 37, here's the weekly view of TLT. Remember, I postulated that TLT had a pretty good major bottom there because you were in the demand zone. You had 5 clear waves to the downside with divergence. And so far, we got a solid up candle here. The TLT is up 9.6% this month. And now I'm expecting some sort of ABC rally ultimately. Moving on to a few market sectors. We're only going to look at a few of these. Here's the transports. Been showing this. Remember, we had that tight coil pennant pattern in November, played out. We're into a supply zone and pulling back a little bit. Chart 39, Jets Airlines ETF, subcomponent of airlines. Remember, I was stalking this in late October, and you had a trigger there basically the first day of November in that channel. And it's been a hell of a move. Hope you took some profits. Hope some of you caught it. Chart 40, semiconductors. Still holding up very strongly. 90 MA is your first support. Chart 41, banks. Again, nice move up. Basically, a nice double bottom move off that support. So far, struggling a little bit at the 200-day moving average. Chart 42, financials. Still very strong. Just a minor little pullback today. Chart 43, XLE Energy. Since that little double top we had in September, just chopping around here. What's the KISS system doing? It's flat. It's not long. Chart 44, biotech. This is another long idea I pointed out back in mid-November off those dojis. Nice move. And chart 45, LABU. That's the triple ETF for biotech. Still has a nice little inverse head and shoulder pattern here, so this is still one to monitor, guys. Finally, chart 46, emerging markets. Again, hell of a move since that October low as well, pulling back a little bit, but this area looks fine. All right, moving on to commodities. Chart 47, DBC pulling back this week still holding this little 200-week moving average for now. Chart 48, crude oil. Again, heck of a pullback from the September highs. There is a demand zone down here. Whether we make it to there or not remains to be seen, but nice pullback in this area. Chart 49, natural gas, down about 1.8% today. This is the weekly chart, still in this channel, basically testing the channel line now. Chart 40 or 50, copper, off the highs today. It's attempting to try to break this resistance trend line and 200-day moving average. Today did not confidently break it, but it's testing it. Again, really logical rally off that big support area. Chart 51, DBA, agriculture. Again, you can see melting down from that little tight pattern. Here's a long-term uptrend line. Essentially matches the 200-day moving average. Chart 52, uranium. Boy, remember, guys, go back and listen to my newsletters. I've been long-term bullish on uranium since 2020 and 21. And this year I've talked to you about it as well. I said once it broke that pattern, it should have a nice rally, and it's moving up very nicely. Look at that. Chart 53, here's uranium on the daily. Again, made a new high briefly. Again, long term, it looks amazing. Chart 54, US dollar, again, continues melting down, still below its 200-day moving average here. Chart 55, gold, up slightly today. Again, as you know, it broke its downtrend line back in October. The ratio is also looking better here. That's the GDX, that's the gold stocks to gold ratio. Remember, the stocks tend to lead. They've been leading down since May. And it's trying to move up here, testing the trend line now. Chart 56, here's the weekly view of gold. Again, one thing on the ratio is starting to look better too here. But otherwise, long-term resistance, remember, on gold is basically that triple top resistance up near the 2085 area. Chart 57, silver, weekly chart. Again, as you know, we've been monitoring this coil here. Chart 58, there's the monthly view of silver. I really like this big coil. Really set up. Energy, basically, guys, think about it. Energy has been consolidated here now for 4 years. So energy's building. When this breaks out of here, it could start a monster move. Chart 59, GDX, gold miners. Again, I've been showing this potential inverse head and shoulder pattern. I've been saying have a swing stop at that 27 higher low. Nice move. The 200-day moving average, now we need to clear that. Chart 60, there's the 2-hour review. Really not much to say. Nice rally after filling that gap, obviously. Chart 61, GDXJ, that's the gold miner junior ETF. This is the pattern I've been showing. So this move up, guys, is either wave C or 3. Let's look at some individual names that we've been showing. HMY has been one of the strongest ones, continues to make new highs. Some ones that's been on the list, FSM, it's a silver stock, inverse head and shoulder pattern. Look how nicely this puppy's played out. Chart 64, WPM, it's also been on the list, Wheaton Precious Metals. Nice move after breaking that trend line. Jarber 65 AEM, similar look to the GDX, this kind of inverse head and shoulder pattern look. It's above its 200-day moving average now. Jarber 66 Gold, Barrett Gold, also a similar looking pattern. Remember, we first had as a long back in October off that long-legged doji. That was the great entry. But Jarber 67 MTA. Remember, this is the weekly chart. I've showed this over the last month or so. This was a big area, this big support, and you can see we've rallied off of it nicely. I said this was a good area to buy it. Hope some of you did. And finally, Jarber 68 DRD, another gold stock. You can see it's in a coil formation. So there's some ideas in the precious metals. Now let's move on. Let's talk about recent trade ideas. So Jarber 69 TCN was a long idea a couple weeks ago. Nice move after breaking that trend line. Right now it's 200-day moving average. Take some profits. Jarber 70 GANX. Remember, this was the long idea of mine a couple weeks ago out of this nice little bottoming pattern. Heck of a move, wasn't it? Jarber 71 Massimo, another one that's been on the list for a couple weeks at least. Continues to trend higher. At this point, guys, you could probably put a tight stop just below that little higher low last week. Nice profitable trade. Jarber 72 LPG, another one that's worked out. This tight coil. We like coils because they can produce nice strong moves. And look at that move since breaking that coil. Jarber 73 LMND Lemonade. This was also on the list. Here added a trend line. Could pop again if it takes that out. Jarber 74 CKPT Checkpoint. Potential inverse head and shoulder patterns. Pickup in volume. Looks pretty good. At least targeting the 200-day moving average. Jarber 75 VSCO, another one of mine that's been on the list for a couple weeks. Continues to work higher. Again, no reason to take a loss on this at this point. You're up. Just trail your stops up, guys. And another one, Jarber 76 BLDR. It's been on the list. We had it as a flag back here in mid-November. Potential targets up there around 145. Jarber 77 SWBI. Potential short if it loses this lower trend line. Kind of a rounded top. And Jarber 78 NRDS. Here's one of the new ones. Beautiful coil. We like these coils. One to watch for tomorrow. Jarber 79 Airbnb. Here's a potential flag setting up. Measured move up here around 142.50. And the final one, Jarber 80 PGY. Potential short if it loses this. I'm not a big fan of shorting these low price stocks, but again, it is an objective setup. And there you go, guys. We'll see what happens tomorrow. Let me check on futures for you. So currently, ES futures are up 2 points. Anyway, have a great evening. Thank you for all your support, and hope you guys are looking forward to those KISS systems. If you're on YouTube and you haven't signed up, please sign up. Consider that. You're missing out if you're just watching YouTube videos. All right, guys, take care.